Hey, my name is Brian Nail. I'm a mortgage loan officer with Primis Bank Mortgage. I want to tell you that I absolutely love being a member of the Spread the Positive Network. It's such a great mission and helps bring so much positivity to our community. It's truly a pleasure to be part of. There are a lot of ways to navigate financing a home, and in markets like this, having the advice of a trusted local professional is key to making sure you get the right advice for your specific circumstances. Whether you're interested in the purchase of a new home, second home, or have a need for a refinance, I'd love to earn your trust. If I can help you nail your mortgage, call me at 615-243-3976 or visit nailyourmortgage.com.
Primis Mortgage is a subsidiary of Primis Bank, a member FDIC, equal housing opportunity. As always, all loans are subject to approval. Primis Mortgage, NMLS number 1894879.
Short answers to hard questions with Jonathan Harmon.
Dun, dun, dun.
Yes. All right. So loan incentives. Talk to me about loan incentives with the newer higher rates and just the state of the market here in 2023. How are we looking?
Sure. Lenders are always looking for ways, let's just call it what it is, to stay in business and stay relevant. And when rates go in 2 years or so, a little less than 2 years, when rates go from 3-0 to 7 and some change, it makes it very difficult. Obviously, the market has cooled. We've got fewer buyers just in general, just because it's very expensive to buy. The ones that are buying need to buy, and I've answered another one of these, and it is a good time to buy if you can figure out the payment and you can figure out all of that stuff. My friend Brian Nail, of course, always says we don't like the whole marry the house, date the rate thing, because we don't know for sure if and when rates are going to drop. So you still got to be able to afford the house at the rate, just in case they don't ever drop, right? They probably will, but just in case they don't.
Because that's happened.
Yeah, I mean,
here.
Yeah, they get stationary, and if you think, oh, they're going to go down in 6 months, if you thought that 9 months ago, you were wrong.
Right.
So you've got to be able to actually afford and be comfortable with what you got. And at some point, rates will go down. Now, is that going to be 6 months from now? Is it going to be 10 months from now? Is it going to be 3 years from now? I don't know the answer to that. And anybody that tells you that they do are lying to you. They don't know. So anyway, I digress. What we do have, though, is a lot of banks are looking at ways to incentivize you to go ahead and make that step. You can get deals on houses right now. There are buy down programs for rates. There are situations where a lot of lenders are giving you kind of a golden ticket. So at some point you're going to refinance. They're going to waive all their fees for you to refinance if you do your loan now. So that's pretty cool. There's also all kinds of different products entering the market, loans specifically for different jobs, whether it's teachers or first responders or military or doctors or, any of those kinds of things. There's all kinds of products just for them. And then, THDA has kind of reinvented themselves several times over the last years. And they are a pretty decent loan program right now, as far as being able to subsidize rates and things like that. And I'm going to dovetail that with some of the big national builders have their own lenders, and they're offering some combined stuff. There's a particular builder we just went under contract with this past weekend, and in that, the builder is paying a rate buy down, so my client's going to end up with a rate in the high fives.
Wow.
Just for using their lender, and that's not a bad deal.
Yeah, we had a version of that with the deal we did, pretty much. So
yeah,
awesome. Great answer.
Thanks.
It's a great answer to a hard question.
Was it a short answer?
It's pretty short.
Okay.
Good job.
Yeah.
On to the next.